I'd like to jump in and go straight to Vuyo Noganchi in his library. And I'd love for you, Vuyo, to give me some context, maybe some thoughts to kick us off with what's happening in the economy right now. What should people believe and what shouldn't they?
Thank you, Lavelle. I guess in a session such as this, it's important that we acknowledge what's happening around us. I mean, the numbers are moving fairly quickly, and as a result, we almost writing new notes at various points within this particular webinar as we go along. But I mean, our minds and our thoughts, I guess, are with those that have been impacted by this virus. I mean, South Africa's had its first experience, I guess, of the social distancing elements, the isolation and lockdowns for the various levels. Currently, over 50,000 cases, I guess, within South Africa, over 7 million cases across the globe, and we have already lost over, I guess, 1,000 people to this virus in South Africa, and across the globe, a much larger number. I want to touch on the economic aspects, I guess, from a number of angles. Firstly, just from the raw numbers, really, what's the world coming into this crisis? What is the world leaving or moving in past the crisis? Looking at what some of the impacts are at the ground level from a manufacturing aspect, the markets themselves, as well as, I guess, bringing it closer to home just in terms of South Africa. Essentially, from a global perspective, the world was moving along at a pace of about 2.5% growth on a GDP basis before we entered this crisis. As you will all recall, we had just been through what we would call the trade wars with the US and China, going back and forth on terms in terms of trade. And obviously that had already weakened the global economy, weakened the South African economy. And if you look at the emerging markets themselves, would have been delivering around 4% on a growth basis in 2019. Fast forward into the COVID period or the COVID crisis era, and we're certainly looking at much more negative numbers than we've become used to. In fact, the Southern African region is set to enter its first recession in the last sort of 25 years as a region in itself. So it is quite severe in terms of what we are anticipating or looking at from a COVID perspective, the economic impact. And the globe itself, the IMF or the World Bank looking to project recessionary numbers into the regions of sort of low 5 to 6% in terms of returns. So as I've said, the markets themselves were challenged, and governments and central banks have had to take significant metrics in terms of trying to alleviate what's happening in the market. So monetary measures or fiscal measures. From a monetary perspective, we're talking about the cutting of interest rates, or allowing banks more room to lend into the market, so sort of reserving ratios. So from a fiscal perspective, is what governments can do in terms of spending or addressing the revenue collection that they will be able to give relief to the consumer on the market. So a lot of these have happened. Over 200 countries across the globe have implemented any one of these two particular metrics, and really the intention there is to ensure we retain confidence within the financial markets, that people believe that when they transact, things happen on the other side. So essentially, if you take the words of Mario Draghi when he was going through the GFC in 2009, or he said, we'll do whatever it takes in terms of trying to address these markets. If we look at manufacturing across the globe, obviously, whether you are importing, whether you're exporting, you are impacted in terms of various markets across the world have closed or locked down. So you can't export your manufactured goods, or if your manufacturing process requires certain end products that are imported, you can't source those as well. So it's been very difficult, and jobs as a result will be quite strained. We've already seen record-setting numbers in the US. South Africa is already a heavy unemployment country, but certainly we expect increased unemployment from this particular crisis in itself. From a markets perspective, markets have taken a significant impact in the month of March. There has been some recovery, or close to previous levels through April and May, but certainly we're seeing some, I guess, tension in the markets again. I think this morning you saw that the American markets experienced probably the most significant fall since the March crisis hit in the early part of this year. So it's very uncertain at this time in terms of what happens within markets, but luckily inflation played along and was running at quite a low level indeed, we had oil falling off quite a bit as demand fell off as a result of the COVID crisis. If we bring it closer to South Africa, as a country, we were already in a poor place. We had just gone into a technical recession at the end of 2019. So we're certainly set to face another recession, I guess, or a deepening recession as we go into 2020, perhaps coming out of this in 2021. So it's certainly set to be quite difficult. Our currency has taken an unprecedented fall towards sort of 20 Rand at dollar levels, levels we last thought about during Renegade at the time. So I think in short, Lavelle, all I can say, I guess, is that, it's been a very significant and severe impact, and the quick impact that COVID had on the global economy suggests that the recovery from this is likely to be quite a protracted recovery.
Thanks, Vuyo. I think maybe I'll stay with you on this one and come to something that I think we get a lot of questions about. So for me, has anything like this happened in the past? Right? Is there any specific time, maybe without the pandemic, where we've seen it, that we've experienced, that people can look back to for maybe history? And the second part of that is, with all the negativity and everything that's come down and that we've seen, and as we recover and learn together, is there any room for optimism?
So we'd have to look very far into the past to find something very similar if I'm talking on a pandemic level. So probably as if we look into the 1800s was the last time an economy faced recession as a result of pandemic. But if we go through the various major financial crises of past, I'm going to name a couple, and if I don't name yours, I'm not trying to be offensive. I think I'm just picking a couple of major ones here that, you think of the Great Depression, which is said to be sparked, I guess, by the stock market crash in the 1920s. You think of the energy crisis, which took place in the 70s. Throughout that period, you think of the Asian crisis, and you think of the global financial crisis. So many of us here are old enough to remember at least the global financial crisis, perhaps even the Asian crisis. And all of these crises brought with them very, conjoined elements. So, the element of psychology, where people lost confidence in the market. In fact, during the Great Depression, when the stock market crashed at the early part, a lot of the bankers went to push funding into the markets and try to prop up stocks, which had worked in the previous crisis and didn't seem to work in this one. So certainly we learn from previous crises and we try to bring those learnings into the next crisis. But things such as job losses, things such as recession, things such as bankruptcies, they still prevail in these particular crises. And in this one, we've certainly learned from the GFC, the global financial crisis, and tried to bring in the elements of, bringing liquidity into the markets, showing the participants in the market that the central banks or the governments are really intent on trying to alleviate the situation. So yes, we have, learned certain things from these crises, but, something that these crises didn't bring was an impact on our own mortality. So people dying in the market is something, new to a lot of us at this time. And certainly poverty does bring a higher probability of death from an actuarial perspective, but in this instance, this has been a very direct impact on mortality. So this crisis has been quite a different one for a lot of us, and we have used words such as unprecedented, although there are historical cases of similar crises. But essentially, with things going down in the way that we look at markets, but also from a human perspective, it certainly does present opportunity from an investing perspective, where certain, investment instruments have been impaired, perhaps unduly so. It does present opportunity for the investor, but certainly for the, just the people and the humans amongst us. Really, we obviously stand in solidarity, looking to overcome the pandemic. We hope for a cure to the pandemic at this time. And then I think I was reading a newsletter from my high school back during the Spanish flu that took place in the sort of 1900s. And at that time, there was dire situations, but there are pictures in the newsletter of people wearing face masks like Lavelle was wearing earlier on. There are, stories of people who thought, will we get through this? And I think having been through that and being in a similar situation today, we can certainly hope that we pull through in an optimal manner.
Thanks, Will. I love everything about that answer and the fact that we are in this together, and it's not a one-man fight. It's an everybody fight. If I can go to kind of Norma and Mopalo, bring it a little bit closer to home. So I know Vuyo did say he brought it close to home. We're going to bring it maybe slightly closer to home for some of us. And maybe we mentioned before that there's a lot going on around your family, things you need to think about. There's so much information. Vuyo gave us so much information now as well. I think I'm going to come to Normie first over here and ask maybe, how does one rationalize all of this? How do you cope with everything that's happening right now and the trauma around COVID-19 and its crisis?
Thank you, Lavelle. I think trauma is an interesting way to describe it, and it's actually really apt. Counselors and psychologists describe trauma as our response to a distressing event, and certainly the events of the past few months have been distressing. We've experienced anxiety around our own lives, our health, as well as that of our maybe parents or older relatives. We're also really frustrated because our freedoms, for the most part, seem to have been taken away from us. And so there's all sorts of, emotional and psychological experiences that are happening as it relates to our well-being and the lives that we want to live. And then there's kind of this huge financial piece where, across the spectrum, people are experiencing an impact on their finances. So you might be in a fortunate position where maybe your income hasn't been impacted. Or it might be that your income hasn't been impacted, but there's increased pressure on your income because you have family or relatives or friends that are relying on you more so than maybe may have been the case in the past. And then, lastly, your income may actually have been paused by your employer, or you could even have lost your job. And so there's kind of a range of financial anxiety that we're experiencing there now. I'm not a counselor, but it is useful to borrow from kind of the strategies that counselors and psychologists use to deal with trauma. So I'm gonna kind of go through four things very quickly. The first one is around remaining connected. So we're feeling very isolated at the moment, and isolation has been shown to actually increase levels of anxiety and depression, and so remaining connected to your friends and family is really important. Leverage technology where you can, and then also remaining connected to professionals, people that can actually help you navigate some of what's going on, whether it's, again, talking to a psychologist or accessing your doctor, but also you may connect to your financial advisor if you have one. The second thing that I think is really important as a strategy is around staying informed, and you need to make sure that you are accessing credible sources of information. And this information is important because it's going to help you sift out the noise and really understand what's going on. And kind of related to that, I think it's about reality checking yourself. And so understanding that there are going to be challenging times. We mentioned that certainly from a health perspective, it's going to get worse. And so understanding that it's going to be challenging, but also at the same time that there's things that we can do. And so you need to figure out what is within your control. And then kind of the fourth one is what counselors call tools of hope. And so these are things that, for example, eating a healthy diet, making sure you're getting enough sleep, and so taking care of your own physical and psychological well-being is important because you need to be in a position of strength because there may be a whole host of other really big decisions with long-term impacts that you might have to make as well.
I'll speak to the point that Normie made around certain people's finances that have changed. How do we go about managing that? That's maybe the first question, and maybe breaking it down all the way down perhaps to a budget of sorts and how one manages this change in your household. And the second one to that is, how do you manage the inflow at the moment? Is there a process? Do you have anything to cope with the amount of information that's coming in?
Hi, Lavelle. Yeah, and I mean, this I guess, crisis has hit all of us in quite a significant manner. I think the important thing, I guess, to realize is that not just only are we investment professionals that sit here in front of our clients, but we also have our very own personal impacts that have come through. So I guess first and foremost, the thing that many of us have looked at is to see ways in which we could assist where we have been fortunate enough to continue to be able to, I guess, provide for ourselves, but those who have been impacted being able to, push funding in directions that allow us to stand in solidarity with that. The difficult thing, which I guess we'll speak to as well during the course of this conversation, is that even as investors, we are also susceptible to the various challenges or biases that various investors can face as you go through a crisis. I say we always long-term investors until we aren't, and at this stage, with so much information flow, so much changing in the market, it's been important to of course retain a very focused view on what your objectives are as an individual. Why exactly are you putting aside money for? What particular purposes are you doing so? And so in conjunction with looking to support the system, the friends, the family that exists, it's also looking to ensure that you maintain the health of your own particular plan and objective on a long term, and filter out, I guess, a lot of the noise and just go back to the learnings and lessons in terms of how you effectively achieve financial goals for yourself. So I think, I'm certainly not a professional financial coach, but I certainly hope I'm doing a good job in terms of, trying to at least maintain the financial health and well-being from my own perspective.
So Mafalo, as the personal finance coach, maybe the two things Vuyo did very nicely for us there. He spoke nicely about putting together a plan, and a big part of a plan is a budget. So perhaps maybe you can give me some insight into how you manage your budget, what this crisis has done to that thinking around the budget, and then also how you cope with all the information that's coming through.
So I think for me, Vuyo touched on something actually that I have not thought of, right? And that's why I love this conversation so much, because, in 1 minute, something just goes off. And he mentioned that this is the first time that through a financial crisis, our mortality also is affected. And I never thought of it. I never thought of it in that way, that actually the fear and the anxiety really is around the fact that, goodness, something might happen to me, right? And not only that, but this affects my finances as well. It affects how I live. So I think that is the underlying thing. That is our collective experience. This is what we are all experiencing. And I think if we can acknowledge that and realize that, I know we've used the words, we are in this together quite a lot, but truly this is our shared experience. If we can start from there, right, and realize our own fears and realize our own anxieties. I mean, I remember when we went on lockdown, the first few weeks, I just went into thrive mode. I wanted to work. That's all I thought, I have control over this. This is what I'm going to focus on. And it was leaving me more anxious. And I think the second thing that we all started doing was consume as much information as possible. And the information wasn't always correct, right? There's fake news, there's lots going on social media, there's lots going on the internet. And I had to come back and say, what is it that I can consume? Information that is from correct and reliable sources. That's number one. For me, that was important. But not even every day, right? Then the second thing was to say, okay, how do I take that information and look at my situation as a human being, as a person going through this experience, and make it so that I can control what I can control, right? You can't control the pandemic, but what are some of the things that I can control as a human being experiencing this thing? And for me, that was life-changing. That was like my aha moment, like now with Vuyo having said that, the fear already is around mortality. And for me, that made me step back and said, okay, I can control what I spend my money on. I can't control how far the lockdown is going to go. So it means that definitely I won't be traveling as much. Maybe I used to spend about 4,000 or 5,000 on petrol. Now I'm not going to be spending that. What are some of my goals that I've set for myself in the beginning of the year, right? Because a lot of people through the pandemic have forgotten that there was January when we went into saying, I want to set goals for myself. Look at those goals. They haven't gone away. You are still here. And those goals that you set at the beginning of the year are still very much valid. So I went back and I said, okay, this is the situation. Now we're going to have to maneuver around this new situation, the new reality we find ourselves in. oh, by the way, some optimism comes through. I am saving from the traveling that I do. Okay, that's an extra 4,000. But what is going to offset that? Because the reality is it is offset by higher data costs, by higher grocery costs. People, when you're sitting at home, for some reason, you end up going to the fridge one too many times. But how do I play around with my budget? How do I, it's a give and take with your budget. It's a real thing. It's a breathing thing, your budget. It's who you are. And so it's looking at those things and saying, okay, this is the situation I find myself in. What is it that I can control? My goals were such that in January, I thought, by June, I would have done this. How can I still achieve that? And for me, I think that's the crux of budgeting, is that it's something that you interact with. And you look at on a regular basis, according to the situation you find yourself in. So for me, when it comes to budgeting, and I've always said this, that budgeting is the cornerstone of your financial life, to a healthy financial life. If you don't have it, you are just wishful thinking. So it's to say, okay, I do have a budget. We're going through a pandemic, but how can I make sure that it still breathes and lives the same sentiments as I had started at the beginning of the year?
Mopalo, you mentioned something about control, which I find really interesting. So there's a psychology professor in the United States who has a theory about why we're feeling so unhinged with COVID, and it's not only that we're facing this kind of anxiety around our health and our lives, but also we've lost the sense of control. And psychologists believe there's a link actually between control and optimism, because if you feel more in control of your life, that the actions that you're taking are going to get you to your long-term goals, it can make you more confident and hopeful about the future. And so kind of taking that step to identify what you can control is actually going to help your mindset and feel a little bit more optimistic about what's going on.
Absolutely. And
no, go for it, Mopalo, go.
Yeah. So, and you know what? I've always considered myself an eternal optimist. The first 2 weeks of the lockdown were the hardest for me, because exactly to Nomi's point, I felt like I was not in control. I felt like, goodness, we had all these plans that we're traveling. I was going to travel to Cape Town. I was going to travel to Dar es Salaam, and all of these things I have been shaken to the core, right? But how do I take back control? By, again, going back to reliable source of information, recognizing your own emotional state and saying, actually, I feel like this. I feel overwhelmed. But okay, you don't do that for too long. And you say, okay, what else can I still control even in this situation? So I think, yeah, to Nomi's point, it's very correct, and to what psychologists say.
Thanks, Nomi, Mopalo. What I loved about that is talking about control. The one thing about a budget, and I don't know if you experience this in yours, is that if people don't have a budget, it's very easy to convince yourself you have more money than you actually have. So it's almost very important to start out and be honest, because the only person you lie to around a budget is you. No one else actually worries about your budget. On the two things of control, when we talk about money, so we've touched a little bit on budget, and as we know, and you've mentioned it before, everyone in the room, is that people's finances change, obviously, in various ways currently. Some have the same income, less expenditure. Some have less income, similar expenditure. So there are various people, and we understand the tough struggles that everyone has in their own right. Maybe I want to move to Nomi and maybe bring that back to Allan Gray a little bit around behavior. So let's say you are invested. Let's say you are with someone right now, not just Allan Gray, any investment manager. You might be somewhere at the moment. With seeing the drop, Nomi, in your experience, we spoke a little about rational and people thinking about it. Do you see people being hasty to take money out at the moment? And should they be feeling bad if that is the case?
Yeah, so that's, I think it's a really great question, because we're probably experiencing a lot of emotions that are going to make us want to, or at least compel us to act as far as our savings are concerned. And so if your savings are exposed to kind of the markets, you would have been on quite a roller coaster ride over the last few months. And typically what we see happening is that obviously we're anxious about losing more money, and we want to take an action that's going to hopefully prevent us from losing money. And so we see people kind of going in and disinvesting their funds and maybe choosing to sit on the sidelines so that they can wait things out. And now, you know, when we're acting off of our emotions, something that psychologists again call hot thinking, which is a kind of really defensive and reactive action that we might take to protect ourselves, it's useful in circumstances where shortcuts and processing are necessary, like in an emergency. But I think decisions that have to do with your savings and investments are not an emergency. And so it's very important that you find a way to distance yourself from kind of the anxiety and the fear and the emotions that you're feeling right now, and really evaluate what's going on before you make decisions that impact your investment. And so what we've seen is that, number one, it's really hard to time the market, but we see a lot of the times that investors are trying to do that. And so what that means is, you know, you're trying to disinvest because you think that's going to help you save your money, or it's going to help you not lose as much as you might think you would have lost if you stayed invested. But more often than not, we actually find that investors are taking the decisions at the wrong time. You know, research shows that periods of poor performance are often followed by periods of recovery. You know, some research done by JP Morgan in the US showed that 6 out of the 10 best trading days of the stock market actually followed the 10 worst trading days on the stock market. And we replicated some of that within our own balance fund, and we can see that periods of low returns and periods of high returns are typically concentrated around the same period. And so what that means is, if you take an action and you disinvest or you move your money out of the market at a period of low performance, it means that you miss out on the recovery. If we look at kind of the 20-year history of the balanced fund, if an investor had missed the 10 best performing days in the balanced fund, their investment would be 25% less than if they'd stayed invested that entire time. And so it's very important that you take a step back from the emotions that you're experiencing, and that you focus on the investment truths, and so understand you know, how your investment managers is making decisions, and so that you're not focusing on what the market is doing, what market prices are doing, etc. And where possible, seek expert advice if that's what you need. So, you know, tap into an independent financial advisor that's going to help you put things in perspective.
Thanks, Naomi. Maybe I'll come to Vuyo on this one and talk. We've spoken a little about behavior, and something I always find ironic that I always hear is that when people are invested in this time, the emotion says, take the money out, it drops. But when you're not invested in this time, the emotion says, put the money in, it's definitely going up again. So why is the optimism there when I don't have money in the game, but it's gone when I have money in the game? So in your experience at Allan Gray in the industry, maybe talk a little bit about what you've seen on client behavior, withdrawing, adding, doing investments during this type of time.
Good, thanks, Lavelle. I guess essentially, you know, at these particular times, there's a number of biases, I guess, that people exhibit as individuals. But also, I guess when, you know, in my space, we deal with large institutional pension funds, and those groups may, at the same time, exhibit sort of what we call groupthink in how they approach, I guess, investment decisions. So often through time, we've seen that a number of investors have made decisions which we wouldn't have necessarily, I guess, backed as a business. But, you know, the prerogative is on the investor to make their own choices in terms of their monies and how they direct it. And a lot of the time, you do find that people make the worst decision at the right time. And if you look at the various, I guess, studies that Nomi has spoken to earlier, you know, once we've got a good mass of data, we start to be able to track and see how people are making decisions with their monies. And it does come through that, you know, when a star manager is really delivering results on a backward-looking basis, people feel that they need to invest there. When indeed, I guess, the other manager who hasn't done so well is the one that you leave. In fact, you know, I guess financial sense suggests that if that particular manager hadn't done well, it means potentially what is in that portfolio is actually fairly cheap. and has a higher likelihood of doing better going forward than the manager who's done well, where they may be carrying some expensive instruments. So I think essentially for the investors, I think it's important that they're aware that I am a human, I am a group, I am an entity that may have biases that exist. And if these biases exist, how do we address them? And Nomi spoke earlier to the issues of checking yourself, reality checks, peer reviewing decisions, ensuring you have an advisor in play to review decisions and make sure that you are making rational decisions in the right time, as opposed to making the mistakes which will go down in history for another Allan Gray study.
Hopefully history will show that we came out of this in a positive light, which we all hope for. And maybe for me, I'd love to come to Impala for this one. So working in the industry, working for a company like Allan Gray, you always hear long term. And now we're talking about things that affect your emotions, things that actually affect us day to day. We talk about long term. Are there any merits to long term at this point in time? Mopala, if I can leave that to you and what you see on the ground and what you have to, the conversations you currently have.
Yeah. I think it's interesting what Nomi mentioned, that right now, actually, a lot of people are asking me, okay, interest rates are low. Should I be doing this or that? Share prices are low. Should I be going into the market? And but for me, what I've realized is that this conversation around COVID-19 and my peers going through this crisis has made them more aware of their personal finances, and they realize that they do need to think long term. Because previously it was, YOLO, we're living right now. We can't think long term because we're still young, right? And this crisis, we have had a lot of people who are thinking to themselves, I have a bit of money right now, but let me refurbish my house. Let me make sure that my comforts are there. But they did not. Yes, exactly. So they did not think about the fact that, if you do hit a crisis, what happens? What are the impacts on your income? So for me, as I've always said, and I've said this over and over to my peers, to my audience, to my tribe, as I call them, that there definitely is merit to thinking long term, because you just never know what's going to happen, right? And we're not even talking about retirement now, which I will come to. But in January, we did not know that COVID-19 would be affecting us. We saw it as something that was happening to the rest of the world, and we thought we were immune to it. And soon we realized that we're actually going to be affected, right? So, for example, people are starting to think, okay, I never considered an emergency fund. And for the first time, people are talking about it and saying, what, I am putting money aside. If my income has been affected, but I'm seriously, for the first time, I'm actually taking it seriously that my money matters, because it takes care of me when things like this happen. But I want to be raw with this one, okay, Level? I want to be raw with this one. With long term, there's either one of two things. You will either live to retirement or you will die. But if you do retire and you have not thought long term, you will not be able to live the same lifestyle that you're living right now. And we are perpetuating the cycle of black tax, or having to take care of the next generation. That's what we're doing with our parents and with our communities. Yeah. But if you do not think long term, then you yourself, the same person who's suffering right now, you are perpetuating that as well. So definitely there are merits, many merits to think long-term thinking for yourself, so that you won't be a burden to other people, to your kids, but also that you can live with dignity and maintain a similar lifestyle to what you're used to. So long term, 100%.
I love long term, and I'll give you my retirement quick one. The reason I save, people ask me, why do you save for retirement? I may never be a millionaire, but the reason I do it is so that if I have a child one day, that child must never pay for my retirement or pay black tax. Yep. It's as simple as that. Yeah. We got to move the dial, and that's my decision. Everyone's goals are different, and I don't think anyone here is here to tell anyone what your goal should be. I think we're trying to say that if you have a process, you have an idea, tie the goal to the money so that the money is more important. And that's some of the things, little things that we all work through to get to. Nomi, I'd love to get your take on at Allan Gray and some of the things you're thinking about long-term approach? Maybe what are the compound interest thoughts that people should have now? What should we be thinking going forward? Maybe just very shortly wrap it up for us from an Allan Gray point of view with regards to thinking around that.
I think, Mapala said something really interesting around, you may have had goals in January that are still important now. And, when you think about either retirement or saving for your children's education, all of those things are still important, even though we're in the middle of a crisis. And so, yes, you need to figure out a way to survive and manage and make sure that you're meeting your needs in the current world, but your long-term goals have not changed, and they will continue to be relevant even after the crisis. Time is literally the biggest lever that you have for growing your money over the long term, and so the sooner you start, the better.
So we're following the eighth wonder of the world as stipulated by Albert Einstein. Right. So for me, the one thing I want to come to now is we've spoken a lot about the economy, where we're at from a personal point. Mafalo, I'd love to get your insight. We work in the industry, but for you, what are some of the barriers? Now that someone's gone through their budget and they realize maybe they have a little bit of money available to put it away or to think about crisis coming up, or maybe how long this will go. You need to start thinking about saving just in case your job, something happens at your job where you have to make for these preparations. Maybe from your side, what have you seen? What are some of the barriers that people have at the moment?
Yeah. And really, these are some of the questions I get over and over and over and over. So I think the top 3 barriers to entry into the market, number 1, and I know I'm on the Allan Gray platform right now, but a lot of the times people say this to me. They say companies like Allan Gray, which have a track record, they have history behind them, but people think that they are not approachable. They think that companies like Allan Gray, you need tons of money to enter into their market or to invest with them, right? To put their money with them. So I remember, for example, a friend of mine said, you know what, I have 100,000, but I know you speak about the types of investments that you get into, and you've spoken about this investment managers, but do I need more money? And I said, really? So for me, it showed me that a whole lot of people are thinking that to invest in companies like Allan Gray, you need tons of money. And I always say, if you have $500 on a month-to-month basis, you can start. So I think that's the first thing, right? That the cost to get into this company is expensive. Then the second thing is that a lot of people are paralyzed by all the information that is out there. You go to any investment manager, I know you guys have 9 funds, but most of the asset managers have more than, just choosing between a fund as a layman is complex, okay?
Yeah, you just the newspaper.
Exactly. So people are paralyzed by just the sheer amount of information that they don't understand, which brings me to my third thing, is that the jargon that companies, asset managers, investment managers use. I often say to my tribe, to my audience, I say to them, okay, so what are your goals? Are you thinking long-term, short-term? Thinking of in terms of your time horizon, what is the goal? When are you going to need these funds? How old are you? Those type of questions. But I tell them, okay, go to the Allan Gray website, for example, right? And they come back to me and they say, I do not understand what they were saying. So the jargon as well, so the language in which we put our message out as an industry, I think that is very intimidating to a normal person. I have clients, I have my tribe members who follow me and ask me questions. I studied finance with them, okay? I studied finance with them. I was in class with them, and they come to me and ask me, what does this mean? I have people working in banks saying, what does this mean? So I think if we can break down on the jargon, because oftentimes when we attend to this type of things, you find that the professionals speak to their own level because they know that, okay, Livel will understand, Nomi will understand. But what about the person who actually wants to invest the money? They live there, they don't know what to do. They live there, they don't know what to do. So I think for me, those are the top 3 barriers to entry when it comes to investments.
Yeah, I'm right there with you, and it's important for us to know that as well, because so what you're basically telling me is that The assumption that just because you studied anything, you should know how to manage your money is not true. That's basically what you're saying, right?
Absolutely.
So it's very important that money isn't something we all speak about. And I think there's a very key one that I want to bring up that I want to throw maybe Normie's way at the moment is lots of people talk about products, investments, and there's been a lot of talk about retirement products, particularly around should I access my retirement right now and can I access it if I need it? Would you maybe shed some light on that for us, Normie?
It's a really interesting question that's been, I guess, asked a lot in the environment, and there's kind of pressure being put on the regulators to potentially make some changes around how retirement products are structured and the rules surrounding them. So kind of like, if we take a step back, so you might be saving for retirement through a unit trust or some sort of discretionary product. So this is something that's not necessarily a retirement product, but maybe you're putting money away that you might be wanting to access in future. So in that instance, you need to kind of be weighing up. So there are no rules against accessing the money. If it's a unit trust or a tax-free investment, absolutely you can access that money. What you need to think about is what are the implications of accessing that money. So one might be, how do you balance taking just only what you need as opposed to taking as much as you can? And then there's the kind of bigger bucket around actual products that are designed for retirement purposes. And now here it gets a little trickier in the sense that, in South Africa, you can't access your retirement funds unless you have been retrenched or you have resigned from your company, in which case you have an opportunity to access some of that money, and it will be liable for quite a significant amount of tax, as well as, again, you need to make the decision around what is the minimum amount that I need, because that money does have a purpose to serve for your long-term retirement goal. And so you want to be preserving as much as you can, also being cognizant of the fact that you might need to access money right now. So that would be in the case of if you are in an umbrella fund or some sort of a pension fund with your company. So this is only if you resign or you are retrenched. And then there's also preservation funds. So typically with preservation funds, you can make a once-off withdrawal before retirement. If you are in a preservation fund, most people have already made that once-off withdrawal. And so you need to be checking with your investment manager if that is an option. Otherwise, you can't access that money until retirement. And I think that's an important thing, because only 6% of South Africans can retire financially independent. And it may not feel urgent or important now, but when the time comes, it's going to feel urgent and important to meet those needs. And so, so I guess the blanket answer is most retirement products, you actually are not able to access that money unless you are in a product that is with your employer and you have been retrenched, or you have resigned, in which case there may be an opportunity to access some of that money, in which case you need to consider the tax implications, as well as what is the minimum amount that you take that you absolutely need, so that you don't take as much as you can, because that retirement money is obviously is meant for a purpose.
Thanks, Normie. Purpose is very important, and I think we've spoken a lot about what people see, and maybe I'm going to come to Mapalo and Normie for this last one from me before we start taking one or two questions from the live audience. I also want to give our three guests the opportunity to think about something that you want to leave the audience with at the end. So we'll do that after the questions. But up front, I definitely would love to get Normie and Mapalo's insight. Maybe Normie first. Now that I want to invest and I'm coming to Allan Gray, what should I be thinking about? So I'm looking to open up an investment. There's lots of things on the website, factors to consider when investing. So time factor, risk, some of the other things. What are the thinking that goes into that first investment that I'm going to do? So Normie, if I maybe give you one, maybe give us a point, then I'll come to Mapalo, and then we'll take some questions.
We spoke earlier about kind of your long-term goals. I think knowing why you want to save is important. And so, for me, there's three things. So investments can help you build emergency savings. I think for a lot of people, COVID actually caught completely off guard. So you may have never even thought about having rainy day funds until this crisis hit. So that's the first one. So investments can help you build rainy day funds. The second one is around very specific goals you might be saving for. It may be your child's education or a holiday you're planning in 5 or 10 years' time. And then this last one around retirement. So those are kind of like the three buckets. And once you know why you're investing, you're then able to think about looking for a product or a fund that's going to help you get there. Now, some of the things that you need to think about when it comes to choosing that is what is your time horizon? So how long are you investing for? Because that will help you select a fund that is designed to invest for a particular period of time. Second thing that you need to consider is how much volatility are you willing to take on? Now, when I say volatility, I'm talking about how your return might fluctuate over time. And so the combination of those two things together are going to help you select which kind of unit trust fund that you go into. As far as those three things are concerned, emergency savings, goal-based investing, as well as retirement savings, you can access all of those within unit trusts, and then there's specific products designed specifically for retirement that you can go into as well.
Paulo, anything to add?
Yeah, so I think for me, when it comes to investing, I always want to think about the outcome, okay? Yes, first you have to think about your goals. What is it that I want? But I always try to think about the outcome. What is the outcome I want my money to have, okay? So for example, with my husband and I, every single year we sit down and we say, okay, we do what we call a net worth calculation, which is basically your assets minus your liabilities. And we say, okay, at the end of this year, we want our net worth to have grown by this much. So it means, number one, we should not have debt, because if your debt increases, it means your assets grow, right? And that outcome, I think that's the most important thing. That thinking about that outcome constantly, it informs the decisions that you take. So it goes back to what Nomi's saying, that then you need to start thinking about, okay, do I want to get into an aggressive fund? How long do I have? Those sort of things. But if you think about the outcome, I think thinking about the outcome makes it easier to make the decisions, the steps to get to that outcome. So it will inform the type of fund you will invest in. It will inform how long you will be invested for. But I think for me, really, the most important thing we think about is, what outcome do I want my money to have? And if you think along those lines, then yeah, you just get more clarity. You get more clarity, and your decisions and your actions every single time should be aligned to that.
I know, thanks, Mapalo. I know that we can probably talk for the next 5 hours, and I'm sure the people that are watching wouldn't mind listening to you guys answer their questions. But for the sake of time, I'm going to allow you guys to think about what you will leave the audience with after these questions. I'm going to see if I can distribute them as best I can. Maybe the first one that comes up from Mr. Mlungizi Zuma. And this one I'm gonna pass on to Vuyo, if that's okay. Should we stay invested based on the fact that it's very difficult to forecast when the market will recover? And is there any way to forecast that? And what's Allan Gray's view as a business and as an investment approach for that long-term approach?
I like the second piece. Is there a way to forecast that? I guess if I figured that out, I probably wouldn't necessarily be working as an employed individual. But there's certainly, I guess, means and mechanisms you can take to try and reduce the level of uncertainty. So what we are certain about is that we cannot forecast where the bottom is going to be, right? So the markets have fallen. They fell again yesterday. They're rising today. But the bottom is uncertain. We're never certain, I guess, where that particular point is going to be. But the most important thing, I guess, when you're looking at this element of investing, you asked the question earlier, should I stay invested? Is that, I guess, if you're going to be investing, you need to be sure that whatever you're investing in isn't necessarily just reflecting hype. You're buying an idea that is got momentum and everyone is buying into the same thing. You need to be able to assess what is the value of what you're buying and how much is it trading for as an instrument. If you can assess that whatever you're buying is worth more than what it's selling for today, then you have what we call a margin of safety that allows you to know that even if things aren't going to go well in the short term, you know that when that thing attains its normal or sort of true value, you're in a position to I guess, attain wealth. And I think this thing of investing is really, it's an ongoing or continuous conversation. You don't, think of investing as chopping and changing in and out, when you think the time is right, because I guess history will tell you that you're in a losing game. You stay invested because you hope either one, you've got a very great process that allows you to choose instruments that are well priced relative to their true value, and you are going to make money. I don't have that kind of time in my life to sit and look at every instrument to assess value. I obviously invest through vehicles that have many professional people looking at the same thing for me through time, and I presume I've chosen correctly in terms of investing with good investment houses. So in short, for me, staying invested is key. It's crucial to your long-term journey. But secondly, on a long-term basis, if you're looking forward, the ability to forecast is not necessarily something that we have. We're not able to tell the future in terms of what will happen. We can only make our best efforts in terms of taking the information available to us and assessing what the most likely future outcome is said to be.
Thank you, Vuyo. The next question, which I think, Mapalo, I read your Instagram recently, and there was someone that asked you a question, something similar to this, and maybe this is where it comes from. There are things that drop. So equities are fall, markets are dropping, but interest rates have also dropped. So now there's the theory of, should I utilize the interest rate cuts by taking out a loan to invest, for one, and then taking out a loan to lump sum invest with the low markets currently? And I know you had one around, should I take advantage of the interest rate and buy a car? So I'm going to let you answer that for us, if that's okay.
Yeah, sure. Okay, number one, you should never take out a loan to invest, ever. That is a scary thought, okay? So that one, I want to explicitly say, do not do that, okay? That's a dangerous way to go. But when it comes to, so the question really was, the person wanted to find out if they should go and get a house, right? And there were multiple questions she needed to answer each, just even before that, even before just thinking about the interest rates. So for me, it's ask yourself questions about your financial position at that point and say, will I still be able to afford this? I know interest rates might be lower, but there are many things that go into buying a house than just the current prime rate that is going at 7.25, right? But when it comes to investing, so I'll give you this example. I have an investment for my son. I have a tax-free savings account for my son, and I opened his statement in March, and this thing had almost halved, which was scary, right? So long-term thinking also can be brutal. But what do I know? I know that this investment, my son is 5 years old, it's for the next 15 years. So I know that the coronavirus is not going to last for 15 years. So I know the instrument that I've invested in, I know the company that I've invested in, and I'm happy with it. So that doesn't bother me too much, but I'm a human being, and looking at a statement like that is scary. But again, you have to go back to the fundamentals. What is this investment for? What kind of company have I invested in? What is this fund for? What is my time horizon? And also, I've seen a lot of people who are saying, looking at the market and thinking and looking at the statements like I did, thinking to themselves, goodness, I've lost so much money. I don't want to lose much more. Maybe it's time to exit. But you have lost half of your value already. You have lost half the value. So why exit now? If you have 10 years on this thing, this is not going to last for 10 years. Remain in the market, because it's been proven over and over and over again that markets do recover, especially with that time span. You can recover. So for me, when it comes to investing, make sure that your strategy is solid. And I know throwing words like strategy and time horizon but remember why you started in the first place. I think that's the basic and simple English. Remember why you started in
the key things for today is that I think that I took out of this for me from the answers that I got was a plan is important, a process is important, setting goals is important, don't panic is important. The fact that the information is there for you. Do not hesitate to phone the people that are looking after your money. It is your money. Get the information. Understand where your money is. And again, from our side, we know that money forms part of life, and at the moment there are lots of bigger things going on. And we will all try and navigate this the best way we can so that we can come out on the other side a lot better. I think I'm going to pass on to Normie first, and then I'll pass on to Vuyo. Normie, any parting thoughts?
Yeah, just quickly, I think, as you said, current times are really challenging. It's really painful. But as you solve the challenges of today, don't forget about your long-term goals that are still relevant. Benjamin Graham once said, abnormally good or abnormally bad conditions do not last forever. And if you need help with some of those decisions, then tap into the services of an expert like a financial advisor.
Vuyo?
Thanks, Deval. I think what really resonated for me in I guess what Normie said, what Mapalo was talking about earlier, you know, really those individuals who are your friends that have the YOLO factor, you only live once, and looking to sort of, you know, jump in and out when the conditions suit their particular objective. I think we must always recall and remember that investing, especially with long-term objectives, is an ongoing conversation. It's not something that you do at an instant. I guess it's important that the investors here stick to that long-term plan and you know, stay focused on remaining invested in times like this, you know, where we have these significant negative impacts.
Thank you, Normie and Vuyo. Mapalo, I'm going to push you for 30 seconds to a minute for you to share your 6 points. I hate for people to leave without it, so please feel free to share your 6 points.
No, thank you so much, Level. So I think number one, know that you do have a relationship with money. And I think in the beginning, we did speak about, you know, how we're all feeling right now. Know your relationship with money. Figure out your triggers, right? Number two, set yourself inspiring goals. I think oftentimes in the beginning of the year when we set our goals, you know, I want to finish my studies, I want to send my son to school, those sort of things, but we hardly set financial goals for ourselves. You know, what is my financial goal for this year? And it must have a deadline. You know, if it doesn't have a deadline, then we are really just dreaming. Okay. Number three, create a budget. It's important. We've spoken about the importance of it. Number four, pay yourself first. I think for me, throughout my journey, when I started working, I remember I was in varsity and I used to work part-time. I used to earn 3,500 Rand, but I used to put 10% of my money away into a unit trust. So pay yourself first, okay? It creates a very good habit throughout your life, and it doesn't matter how small the amount, that amount of money is. Number four, do not get into debt. If you are into debt, find a way to get out as quickly as possible, because it will put more money into your account, so that you can, so that you are able to invest. All right. And number six, just start. I think that analysis paralysis that people get is scary, but just start. Put yourself in the market and you will learn along the way. Which brings me to my last point, is that you need to take charge of your finances by educating yourself. Do not leave that responsibility to someone else. Yes, having a financial advisor, it's amazing. It's an accountability partner, but you need to take control of your finances by learning how money works and learning the different types of products that, for example, Allan Gray does offer. It just makes it much easier for you to get through how all of these things work. So yeah, those are my 6 things, even though I had to go through them very quickly.
Thanks, Mapalo. I think I'll wrap it up by saying thank you to Mapalo, Vuyo, and Normie. Your answers were fantastic. And I'm sure there will be an appetite for some more conversation, particularly because we didn't get to everything.